I want to talk about the dollar, just given how we've really kind of reached some levels, whether it's the euro breaking above 110, the pound. No one really thought that we could hit 124 right now. Is there a further unwind in this dollar downturn trend?
Hi, Yvonne. How are you, Rush? I think, at least in the short term, let's divide it up into the next few weeks relative to the second half of the year. Over the next couple of weeks, I think the dollar will actually gain back a little bit of ground. The reasons for that is that when we look at things like earnings, for example, which are really kicking off over the next couple of weeks, it looks as if US companies have managed to guide the market into a pretty pessimistic sort of state. So consequently, what we've seen so far in earnings is things have started to look a little bit better than some analysts expect. Secondly, I think at least from a growth perspective, while we think that the high-level indicators in the US continue to deteriorate, what we'll see bottom up is the relative resilience, particularly of things like the labour market over the next month or so. But as we get into the second half of the year, it is very clear for us that the US growth situation is going to look relatively worse to that in Europe, for example, as well as potentially in the UK and in other countries like Australia, and also with respect to China. So we do think that the dollar is going to deteriorate over the second half of the year, and we will see these currencies, particularly some of the laggards like the Aussie dollar, for example, will start to actually pick up a lot of the gains over the next 3 to 6 months.
Wayne, it's strange, isn't it? We've seen the gold prices go up quite markedly, dollar go down. Is that inverse relationship back? Because it's ages since that inverse correlation has worked.
I think at least the correlation with the dollar and gold has been relatively strong for most of this year, Rush. That negative correlation we expect will continue, particularly as we're seeing a lot of strength on areas of investment demand as well as in areas of central bank demand for gold. Some of that is indeed to diversify their portfolios out of dollar base into other assets, and gold has been the recipient of some of that demand. I think the other point with respect to gold is that relationship to real interest rates that we saw over the course of the previous decade up to 2021, we think that that's reasserting itself this year. Last year, the relationship with real interest rates was very weak with reference to gold. But this year, we can see in the early signs, since the start of February, actually, that relationship, that negative relationship of interest rates to gold is starting to really pick up. And given the fact that we think that inflation is going to still be relatively sticky in the US, inflation will come down, but at the core level, it is going to remain above the Fed target. But we do think that the US economy will be in a position where it's deteriorated sufficiently that the Fed will start to talk about at least easing rates into 2024. Now, that's going to say real interest rates continue to move downwards in the US over the course of the second half, and that will also support gold prices higher.
And so I'm just wondering, when it comes to what you mentioned, the dollar story and the euro, does that make an environment where EM currencies can actually bode well? I mean, is that the best way to fade that dollar weakness, or fade the dollar strength, I should say?
I think it is to some degree, actually, Yvonne, but I also think that, as I said earlier, currencies like the Australian dollar, where the current account is in a very solid surplus, the trade balance has been very, very strong. China is now very clearly recovering, and in particular, the housing market in China is doing much better than what many of us had expected. And so the consequence of this is that these laggards, particularly in the G10, to a weaker dollar, will start to pick up some momentum. And I think that's one area where we see a lot of gains to be made in things like the Aussie dollar, but also European growth is doing better. The European economies are starting to move forward quite nicely. Obviously, the ECB will continue to hike interest rates, and so consequently, we think the euro can also do well in that environment.